Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach and senior manager with Schwab. And today we're going to talk about something that we started talking about on Friday. And that is, when might we make the decision to trade a stock versus an option? And we're going to do some comparing and contrasting of stock trades and option strategies today, in and amongst all the other things that we are going to discuss. If you missed last Friday's class, you'll want to go back and watch that. And also, I filled in for Brent Moore's last Wednesday for managing an options portfolio. And we did a little reorganizing or cleaning out our trading closet, so to speak. And so if you missed that, you'll want to watch that as well. I'll put a link to that at the end of this webcast if you're watching it in the archives. I've got Brett Crowther with us in the chat today. So if you are not following Brett on X, you're going to want to do that. Brett Crowther CS. Of course, you'll want to follow me on X if you're not doing that already as well. Barb Armstrong CS. You can also now find us on LinkedIn. So make sure that you check us out there as well. I want to thank all of the usual suspects for being here today. So to Rob and Randall and Josh and Frank and Marcus and Kevin and Virgil and Life in the Fast Lane and the rest of the gang. Thank you all for being here and for being so participatory in the chat. If you're joining us for the very first time, please type a greeting into the chat so that we can welcome you. And just so you know, a quick reminder, and those of you who are here all the time, you already know this, that, when we talk about options, those carry a high level of risk and aren't suitable for all investors. We also use the Paper Money software application on the Thinkorswim desktop platform. And, it's a great place to learn. Make sure that you have a trading plan, that you understand your plan, that you understand the mechanics of how to place a trade, all of that good stuff. Know that there are some nuances or differences. The most significant one for us in this class is that short option positions will never be assigned early in Paper Money. That can happen in a live account. Also know that when we're using stop loss orders, that a stop doesn't guarantee that we're going to get out at the price requested. Now, from Monday through Friday, 4 out of the 5 days a week, Kevin Horner does a great market overview at the market open at 9:30 Eastern. If you're not checking that out, you'll want to do that. So we have really cropped our market overview in this class. Our focus today is going to be on placing new trades. We have one trade that we have to manage, and it's one that I've been kind of dragging my heels on. And many of you can probably relate to this, because sometimes when you have a trade that doesn't go according to plan, you'd rather just stick it in the closet and not think about it. And so this one we've got to pull out of the closet. Just a reminder, if you have never been to an in-person event, I love these things. I was introduced to the world of trading through a live event, so I think of them quite fondly. Back in 2011, I've been a coach now for a decade, since 2016. We will be in New York. Now, I won't be there. I was planning on being home working on the Barb 3.0 project, which I've now pushed out to 2027. But I believe Joe will be there. Ben Watson will be there, and the travel team at the Marriott Marquis in the heart of Times Square. That's a 2-day advanced options event. Then Brett and I will both be in Scottsdale September 19th for that 1-day market drive. And then we'll be off to DC. Ben and I will be in DC for that event at the Ritz-Carlton. And so I encourage you, these are all free to attend. Would love it if you could come. There's also this week an advanced options virtual event starting today. And that starts at 3 o'clock Mountain, 5 o'clock Eastern, runs an hour and a half. It will not be recorded, this one. There is one in the archives if you aren't able to attend. But if you are, there's a live chat and it's very participatory if you're interested in participating in that. Now, for this class, we started the year with a $25,000 account. Our max position size is $5,000. And, if you're new to this class, some people will say, like, Barb, 5,000, like, have you done the math? Like, that's 20% of your original account size. And you are correct, it is, and I'm aware of that. But we wanted to be able to do some stock positions. We wanted to be able to do buy right covered calls with stocks that are maybe in that $50 neighborhood or less. So, we made that decision. Now, if you had $1 million account, you might say, well, I don't want any one position to be more than 5% of my account or 2.5%, so as your account grows, that may change. And our max risk per trade is 2%. And again, if you had $1 million account, you might say, I want that to be half of 1% or a third of 1%, or you might be comfortable with 1%, but in this class that's 2%. Okay. So somebody's asking how you change the paper money cash amount. And you know what? I don't usually, that's a little off topic. Yeah, I'll be at the New York City event in December. But Kevin Horner is actually going to be at the event in August, in a couple of weeks. Okay, so if you want to change the amount of cash in your account, you can click on any position. So if I click on this one, I can say adjust cash. And if I wanted to add more money to the account, I could say, add 5,000. And so currently we have 34,000 and change. And so if I put in plus 5,000, and hit OK, you'll see we now have 39,000 in the account. Of course, we kind of loosely track our results. So let's adjust our cash and take that 5,000 back out. But that's how easy. It's not quite so easy to add cash in your live account, is it? So here's our non-zero amount. And now we're back to our 34.3. Okay. So you just click on any position. Yeah, Kevin's saying, if only it worked that way in a live account. Yeah. Okay, so just to quickly recap, one of the things that, we did last week was we said, hey, if what you do in your account, and, we have a quote unquote small account, we trade a lot of long call verticals in this class. And then we trade short put verticals. And we're going to do, a long call vertical today and a short put vertical. We also do some trades with targets. And you'll notice here, STX, our net liquidating value on this is almost 8,000, but our max position size is supposed to be 5,000. So we had actually, our intention was to buy 4 shares, and I thought the trade hadn't gone through, and I put another trade in. And so when I see this sell order here, is the sell order, I only have a sell order in here for 4. And so that tells me that, this one trade got filled that wasn't supposed to. And so we're going to come in here, we're going to create a closing order to sell, and we're going to sell 4 of our shares. Whoops. Okay. We're going to make that 4. And this is one of those things about and we're going to sell it at the current price, saying 991. Okay. Make it. So we're going to sell those 4 shares. And this is one of those things that if you aren't looking at your account on a regular basis, that, you might have missed that. But I had noticed that we didn't have net liquidating value in here. And so now we have a $4,000 position. And we made some money because the stock is up today, on that mistake, but we could have, lost money on that. And then if we come to STX and we look at this, we place this trade on Friday, and here's our goal is for, it's a swing trade. Okay. Now, the one I've been dragging my heels on discussing is American Airlines. And American Airlines, we did a buy right covered call on. And, you know, we put the call on, we bought it back and made money on that first call. And our intention was to sell another covered call. But now this thing is, you know, it's broken below, you know, we had this inverted head and shoulders and it broke out. And of course, with the Strait of Hormuz, gas is really expensive. Flight prices are expensive. A lot of the airlines have been, you know, on the struggle bus, and American Airlines is one. And we are now down on this one. We are down $641. And keep in mind, we didn't want to lose more than, you know, 500 to 550. And because this is downtrending, you could say, well, maybe we sell, you know, another covered call with the intention of being called out. But when we look at where this is tracking, I think we just have to, you know, buck up and say we should have been out of this. This is a trade mismanagement. So not only did we lose money on this, but we probably took the stop off over earnings and then didn't put it back on. Yeah. Yeah, somebody's saying that's a Head and Shoulders potentially setting up here. Like if I get rid of this line, you know, and so you might say, well, do we wait for it to break below 13? Yeah, we're, you know, we're down more than we want to be down on any one trade on this one. Now, I mean, our account is still doing well. And I mean, this is a paper money account, so we don't have to pay paper money transaction fees and that kind of thing. Also, you know, American Airlines, it doesn't pay a dividend, but if it did, we don't get paid. You know, the KeyBank does pay a dividend, but you don't get paper money dividends in a paper money account also. That's another difference between them. Now with dividends, even if something pays a dividend, it doesn't guarantee that, you know, that dividend won't change or be eliminated. Yeah. Yeah. So we're going to suck it up, Buttercup, and admit our loss and turn this into a realized loss. Okay. Yeah. Okay. So that's that one. Okay. Now I wanted to look at a couple of new example trades, and I looked at JP Morgan today. And you know, one day last week, in fact, I think it was in the Wednesday class where I was filling in for Brent Moore's, we did a long call vertical. And you know, and it's kind of pulled back a couple of days, set up a bit of a bull flag, and today we have this bullish engulfing. Now, if we come back and we look at our position on JP Morgan, we're up $30. So if you didn't place that example trade, and we placed two with two different sets of strikes, one expiring September 11th and one expiring on the 18th, and we're going to compare and contrast them. But could we, given we have this bearish or bullish engulfing pattern at a potential support level, and what might that be? Well, it could be around this like 360 mark, right? So if I draw this line, like, could we add a short put vertical? And when do you most want to place a short put vertical trade? And that is when something is potentially, you know, bouncing off a potential support level. So could we do the 360, maybe 355, a $5 wide spread? On a short vertical, if your only option is $10 wide, then we typically can't afford to place that trade, because it's usually about a 3-to-1 risk reward ratio. So for every dollar you make, you're often risking $3. And so if we can make $3 on that a share, it means we're risking $7, and that's $700. So, but if this does offer a $5 wide spread, and let's come out and look. So September 18th, 32 days away, trades more than 1 million shares a day, which is one of the prerequisites on our example trading plan. And if we look at this 360, we want the bid-ask spread to be under 10%, check. We want there to be at least 20 times the number of contracts we're going to trade, and likely we're only going to do one. So we're going, okay, check. and we are going to look at selling a vertical. Now, would I get enough for the juice to be worth the squeeze? And our rule of thumb is that if the expiration is 32 days away, we want at least a 32% return on our risk. So what we're going to do is switch our gadget, bring up a calculator and say, okay, if I'm risking, that's $1.97. I'm risking $5 minus $1.97. So if the most I can make is $1.97 and I divide that by $3.02, what's my return on risk? Well, that's over 50%. It's 65%. So if we say, okay, we're good with that, you know, I'm risking $3, you know, and if you're math averse, you can just bring up your confirmation. It says we're risking 303. So can we do 2 contracts? No, we can't. We can't do 2 contracts because then we're risking 600 and that breaks our position sizing rules. And we don't like to break that rule, do we? Okay, so we're putting that in our short put vertical group. We're only going to do 1. The most we can make is 197. And the other thing that is part of our example trading plan is that we're coming to our plan is to get out when we've got 80% of our max gain. So when this is worth about 40 cents, we want to buy it back. Oh, sorry. I meant to do this at 360. 360. No wonder we were getting so much. So let's go to 360. 355. Okay, we're getting $1.62. Well, is that still attractive? Well, if I take 162 divided by 358, right? No, 340. That's still a 47% return. Somebody said, is that a common practice, you know, to sell in the money puts? Mighty Mouse, thank you for bringing that up. And Mighty Mouse is somebody that I got to meet at a live event. So it's good to see you here. Okay, you know what? Let me just try something here. Yeah. Okay. Does that sound better? Okay. Okay. Okay, this should sound better. Okay, let me know what you think, guys. So there's our short put vertical on JP Morgan. So now let's look at light. So if you're not familiar with this company, this is Lumentum Holdings. If you come to the Analyze tab, it'll tell you it's a tech stock. They sell optical and photonic products like all over the world. You know, the company's been around for just over a decade, you know, headquartered in San Jose. So I don't know if you know the way to San Jose, but somebody sang a song about that. But they're in the Americas, Asia Pacific, Europe, the Middle East, and Africa. So, you know, we've got a tech company. And one of the things I found interesting, and just because, you know, 2025 was a lot better than 2024, doesn't mean that 2026 will follow in the same, you know, trend. But we went from losing $8 a share for earnings per share to making money. Like that's a pretty dramatic 104. It says 104%, but I mean, that's a pretty dramatic improvement and up 17% in sales. So, you know, some of the under the hood numbers are looking better. And then we, you know, if we look at this from a technical perspective, if I'm playing I Spy with my little eye, come on, come to mama. You know, I see a diagonal resistance breakout. It came back and retested, moving to the upside. We're on the other side of earnings, and, you know, crushed it on earnings, like a strong beat on expectations, which has led to this move to the upside. And then you can always come over here. And, you know, we're not putting a ring on this. We're looking at doing a long call vertical on this. because this is an expensive stock, right? So, but here Mizuho raised the price target to 1140. It's trading at 993. TD Cowen, like they seem to miss the boat. They raised the price target to 820. Morgan Stanley to 1,000. It always kind of cracks me up what a wide range there can be, from one analyst to another, right? But here, but one of the things that I look for, are they raising price targets? So Citigroup to 1,200, JP Morgan to 1,280. And so overall, the sentiment amongst the analysts seems to be bullish. Now, it doesn't mean they're going to be right. So we're following our risk rules, right? And if we say, okay, well, if we back things up, like, could we do a stock trade and just buy 5 shares of stock? We could, and put a target at 1,085. But if we look at, well, where would we put a stop? Like, even if we said, okay, if we look at this recent low, that's at 787. So we'd be risking more than our potential would be to make on a swing trade. But if we think we've got momentum in our favor, maybe we could do a long call vertical. And so we look at this is 99 and 104, so a $5-ish wide spread on a $100 stock. So that's less than 10%. It does trade more than 1 million shares a day. And this is a $1,000 stock. So it's heavily traded. We have 306 and 500 contracts. So that meets our criteria. Our bid-ask spread on the $1,000 is $3. So, how much would we have to pay for this? Well, we'd pay $475. It's a $10 wide spread. So the most we can make is $520. But if we're saying our guideline on this, our example trading plan says we want to make 50%. You're saying, well, you're leaving half your potential profit on the table. It's like, yeah, and we're totally cool with that. Like, this is, and this is one of the things that, like, we were at almost $5, now we're at 380. And so what we're going to do is we're going to put in a fill on this, and then we'll pick our target. You see, now we're back up to 5. So we'll just see where this fills. But if we wanted to put in our target, we're going to say, okay, we want out at 750. So that's a 50% gain. And we're leaving half the potential gain on the table. And you know what? Are we cool with that? We're totally cool with that. Because we're saying if we could make a 50% gain in 32 days or less, we're good to go. And so if you watched the class last week, one of the things we said is, here's our long call verticals. When we place a new long call vertical trade, we are going to add it to our list. So I'm going to add it here. And then we're going to come to our chart, and we're going to draw a line, and we're going to put it on the chart. And, as Ben Watson likes to say, not too particular, not too precise. I just draw the line and then I modify it, because our target on this long call vertical is 990, 1,000. We want it to be above 1,000. And then when we come and look at this, we can just really easily see where we want this to be. And the other thing we do is we just put a little circle around today. So if I wanted to very quickly go through and see where all my long call vertical trades are, it's pretty easy peasy. We can just click from one to the other and have a look. And, part of our daily review is we want out if we're up 50% or if we're down 50%. One of our other rules, and here you can see we're down 96%. And I read this book about pirates one time, many years ago. And one of the things that this particular port did, if they caught pirates, is they would leave them in a cage like in the port, as a warning to other pirates. of what not to do. You know, that you'd end up dead with, you know, it's very macabre, but here's our cage here. This is we traded this over earnings, and it did not go well. I don't know if any of you were around for Cisco's earnings, and so this is, you know, we put this trade on here. We had a diagonal resistance breakout. And, you know, the day before earnings, if we'd gotten out and we discussed it and we said, well, let's just see how this works out. Now, we may throw our shoulder out for patting ourselves on the back if it gaps up, but it didn't, it gapped down. And so we were already over a 90% loss. And so the conversation I had with myself is it worth the $8? Like, what if it does move up dramatically over the course of the week? But this was, you know, in some ways a great reminder of why we have that rule. And Cisco did really well on their earnings. You know, it wasn't that they had a bad earnings report. You know, like the street was expecting 98 cents a share. It came in at $1.22, like 22% over. Yeah, like Rob said, arr. But you know what? Like, just consider this the cost of being reminded of why we have that rule and why it serves us not to break that rule. Now, other people will do like a short put vertical as an earnings trade because prior to earnings, you know, volatility is higher. And so you get the benefit of volatility crush on a short put vertical potentially. But if the stock gaps down, and sometimes, like, against all reason, the market is the market, and it doesn't always play nicely. So there we go. Okay. So there's our JP Morgan. We aren't filled on light yet. So if I like to organize this by alphabetically by symbol so I can come down and quickly see. So, you know, this kind of went in at 375 and it's saying it's now, so I guess by the time I hit go, it was at 375 and it's now trading at 490, which is, you know, what we thought it was going to be. So let's just make it $5. We'll give them, put that in our long call vertical bucket, fire in the hole. Okay, that's light. Let's come and look at ASX now. And this is kind of was our theme for the day. It took us a minute to get to it. But when we look at ASX, and again, this is ASE technology. If you're not familiar with it, you can come to that fundamental tab and do a little bit of reading, okay? It's based in Taiwan. So this is, and how might we know this? Because it says at the end here, ADR. So in addition to our regular risk in placing a trade, ASX is up 150% year to date, but we now have currency risk and all of that potentially as well. But we had something come down to our 100-day moving average again. And, you know, we've seen a fair bit of this as especially stocks in the tech sector went through a bit of a period of consolidation. You know, you may want to draw it this way. You know, this is where technical analysis, there's an art to technical analysis, but either way, we've seen this breakout, retest, moving again to the upside. And this is a $40 stock. So if we were bullish on this and we look at this last earnings, so the one before, you know, came out at 19 bucks a share. This one, or 19 cents a share. This one, the street was expecting 23. It came in at 29. And, you know, if we look at this, you know, what are the analysts, you know, kind of what's their view on this? Let me just, and you can scroll down and have a look. I'm not seeing. I'm not seeing at first glance, I'm not seeing a lot of analyst commentary in here. Not that it doesn't exist, but you could go and do some more digging. But if we said, okay, if this is trading at 40, and even if we put our target at 45, a $5 move on a $40 stock, that's over 10%. And we've got time for it to get there. The disadvantage of doing an option trade is that with the option trade, we've got time decay. And so if it takes a little longer, that can be a problem. And if we say, well, here's our, if we look at our diagonal resistance line as a potential support level, if we took that around 36.71, 36.51 times 0.97, that would be 35.41. So if it comes back below here by 3%, we'd want out. So what was that? Yeah, 36.51. So our stop then would be 35.41, and our target is 40, let's call it 45. And so if we bought, let's say we buy 100 shares, that's for a $4,000 position. So that meets our position sizing rules. And we put our target here at 45. And our stop is going to be at 35.40, 35.41. So we're risking about $5 a share to make, $5 a share. Confirm and send. So, our target is $4.82 above. Our stop is $4.77 below. Now, if it gaps up or down, we could end up out at a lower price or a higher price. A stop doesn't guarantee we're going to get out at exactly this price, right? Right. But this is a swing trade. Now, if you're saying, like, Barb, this is all well and good, but I really don't want to put $5,000 into a position. Do I have another choice? And we could say, well, we could say if we believe this is uptrending, and we do, we wouldn't have placed the first trade if we didn't. It's up almost 30% in the last 14 trading days. So if we look at this and we say, okay, could we do a long call vertical on this, where we're buying a call because we believe it's going up? We want to, make our risk more modest. So rather than risking, if we bought the 40 call, we're paying $300 to $340 for that call. We've got almost 5,000 contracts out on it. It trades more than 1 million shares a day. But if we wanted to modify our risk, we could then sell the 42.50, and we're risking less. We're only risking $1 a contract. Now we're putting a cap on how much we can make. The most we can make is the difference between the two strikes, right? 250 minus what we paid to get in. So we could make $1.50, but we're saying, like, we're happy with 50%. So if we make this, if we say, well, if we're risking $1, we could do 5 contracts, but it now has to move up above 42.50, but it doesn't have to go all the way to 45. And if it goes above 42.50, we might have that 50 cents a contract we're looking for. And then we're happy campers, right? Right, because we've agreed that we're going to be happy campers if we can make a 50% return in that kind of time frame. Yeah, so somebody's saying, why not do a buy right? We could do a buy right cover call. And this is one where, we could afford to do a buy right cover call. We're going to compare to the stock swing trade. Okay, and then once we put that in, we're going to come down here and add that ASX. Okay. And so if we were to do a buy right at the, this is a volatile stock, 65, the volatility is at 65. So the premiums are rich here. So we could sell that 45 call at $1.30 to $1.45. And if we get called out, would we be okay? Well, yeah, like this, $1.30 on $40, $1.30 divided by 40, that's 3%. So that would have been a good idea. So maybe if it starts going up, we could add a covered call to it. And we'll look at that again on Friday. So, but I like the way you're thinking. That was Karma Young. Yeah. Or no, that was DJW that said, why not do a buy right? And yeah, that would have been a good idea. Yeah, and Trader Joe is saying, can we do a covered call, with the volatility being as high? Yeah. So if you change your mind on something, could we go back and add that covered call? We could. And then would we want our stop to be in the same place? We could say, yeah, we do want our stop to be in the same place. So ASX, our stop was at 35.41. So we're going to come to our monitor tab, and with ASX, okay, so we're in this trade. So if we wanted to add a covered call and change our mind on this, and I like the way you're thinking, so let's do that. We had put our stop at 35.41, so we're going to remember that. Our target was at 45. So I'm going to come in and I'm just going to cancel the OCO group. We're going to cancel the whole thing. So we can see now that that is gone. Okay. This next order hasn't filled yet. So, but we're going to come to our monitor tab and we're going to come down to our position. And you can see that we don't have an exit on this. So what we're going to do to this is we are going to sell a call now. Now, the reason that I canceled that other order is the system wouldn't let us add a call to this position if we didn't, if we had a stop on it. So we're going to come to ASX and we're going to come out to the 45 call and we're going to sell a call. Let's see if we can get 135 for it. And we're going to put that in our buy right covered call group. So we got our request, and then we're going to take this and we're going to move this now over to the buy right covered call group. I wasn't thinking about the price of that, so thank you for mentioning that. So now we have American Airlines, which we're now out of. We've got KeyBank and ASX. So now that we have these two positions in, we can highlight the whole thing and create a closing order to close out the whole thing. And the way we do that, we make this a market order that's good till canceled. We're going to click on our disappearing, reappearing sprocket and say, hey, if this goes below 35.41, get us out. And so the reason that we do this, it's much easier to make a decision without emotion when, it's much easier to make that decision without emotion in the cold, hard light of day when you're placing the trade. Then you don't start trading on hope. Okay, and we're going to compare this to our long call vertical. Okay, so we've done 4 trades today. We did a short put vertical on JP Morgan, which I say is kind of bullish to neutral. We did a long call vertical on Light. We did a stock position where we sold a covered call. So we turned this stock position with a target into a buy right covered call. And thank you for the suggestion on that. And then it hasn't filled yet, but we also did a long call vertical. Oh, now they only want to, well, we're saying we're willing to pay up to $1, and it's saying the current mark on it is 92.50. So, we're going to just let that one percolate and wait for that one to fill. And so we've done 4 example trades. Now, I had intended to do another example trade on Taiwan Semiconductor, which kind of came back and kissed the 100-day moving average, which seems to be acting as a support level and is moving again to the upside. And I thought we'd do a swing trade on that with stock, buying 10 shares of stock. But we're running out of time. So I'm going to go ahead and put that in. We'll put our target in at 479. We're going to put a stop at 394. We're using the 30-day moving average, or this 100-day moving average, as our support level. And we're putting our stop 3% below that. So that would be 394.12. And we're going to do 10 shares. So, I'll put that on after the class and we can talk about that again on Friday. Here's my ask as we wrap things up. So as we wrap things up, there is a survey in the chat. And if you'd click on that, there's 2 questions. And it's like 1, I hated it, 10, I loved it, and I'm going to keep coming back, and everything in between. You also have the ability to put comments in. So if you type a comment in, my promise to you is if you put in a comment, I will read it. I sometimes just do a survey says class, answering questions and comments. If there are topics you'd like me to cover in the future, let me know. If there are trading strategies you'd like me to review, let me know. How is the pace? Let me know that. So that's my ask on that. If you hit the like button, by hitting the like button, it helps move this up in the algorithm. So it's an opportunity for you to help more people find this content. So you can be doing a favor for a random stranger whom you may never meet without even leaving your laptop. So that's my second ask. Third, and I mentioned this at the beginning, you're going to want to follow Brett and I in the Land of X, Brett Crowther CS, Barb Armstrong CS, and then come find us on LinkedIn as well. So guys, that's a wrap for today. Thank you so much for joining me. Appreciate your suggestions in the chat. You see, I do read the chat, and I do try and run a semi-democratic class. We sometimes will vote on, do we stay or do we go on some of these things? But yeah, appreciate you being here. Stay tuned. Mr. James Boyd is up next, Trading Technical Indicators. You're going to want to make sure you stay tuned for that. Take care, everyone. Bye for now.